Good morning, traders and investors. My name is Shen Mwangangi, your best market analyst here at HFM. So, I hope everyone is doing well this fine morning, and I'll begin straight with what happened yesterday. So, the main event for yesterday was the US Consumer Price Index for the month of June. While the core monthly figure was slightly higher, or slightly softer than expected, from a 0.2% versus a 0.3% consensus. The headline annual inflation rate surprised to the upside, coming in at 2.7%. So this was above the previous month's 2.4% and the 2.6 market expectation. This upside surprise was the primary catalyst leading markets to price in a more delayed timeline for potential Federal Reserve interest rate cuts and the notion for a higher for longer interest rate environment immediately strengthened the US dollar. Remember, we were expecting interest rate cuts to happen on September, and right now the narrative has changed because of how the CPI came out yesterday. And right now we are looking at a more hawkish movement. Also adding to the market's complexity were the first major Q2 earnings report from the financial giants like State Street and the BlackRock, which disappointed investors and weighed on broader stock investment sentiment. So technically speaking, if I can look at gold yesterday the surge in the US dollar and treasury yields was toxic for gold. This precious metal went all the way down past the 33.0 level per ounce, which was a decline of 0.9%. And at the moment, I can see we are regaining back. We are above the 33.536 level, and we are at this form of imbalance. Also, for the USD JPY pair yesterday, for the USD JPY pair, the Japanese yen was a major casualty of the dollar's rally. The widening monetary policy divergence between a potentially hawkish Fed and the ultra dovish Bank of Japan sent the USD JPY soaring higher. It decisively broke out a 2-month range. As I can see here, we have this high and this high, which was a significantly a 2-month range, which we were trading between 148,353 and also around 142,402. We broke to the upside, signifying bullish pressure and high uh, bullish pressure that came in after the CPI news that came in yesterday, showing that the dollar is strong and it's outweighing the JPY. Also coming in now to the US indices, starting with the Nasdaq.
Good morning, traders and investors. My name is Shen Mongangi, one of the best market analysts here at HFM. So, this is why we love trading. Yesterday, we saw high volatility during the NFP news. We haven't received this type of volatility since the past 3 months. And yesterday, we saw this type of volatility being priced in the market, and traders were able to make thousands, hundreds of thousands, $100, depending on your account balance, just during this session within a matter of minutes and seconds. So, why did this NFP come out this way? If you've been keenly attending our NFP sessions and also our classes at the HFM, we've always been saying that if you have a plus 20,000, a more than expected report of plus 20,000, you're going to have a spike. We never had that on January, February, March, all the way to last month. And when last month came in, we had that large spike because the results was over 27 plus 27,000. You were expecting our, you were expecting, we got our 147K, which from our expected report of 110. Therefore, that's 7,000 more than what we expected, and therefore we had that large spike up. Why did we have this large spike? Remember, if NFP comes out better than expected, it shows that more employment is taking place in the US economy. And if more employment is taking place in the US economy, it means that the economy is getting stronger. So with that perception that was being brought up in the market, we had that large spike in the dollar and any form of pair that is paired with the dollar. Remember, if you have the dollar as the base currency, the chart is going to move up. But if you have the dollar as the quote currency, the chart is going to move down. And you're going to see that in gold. You see, gold here, we have the dollar as the quote currency, meaning that it comes second. And yesterday, we had that large spike from our resistance level that we had marked at the 3349.47, and it spiked all the way down. And right now, we are coming back to retest the 3343 level. Also on the Euro USD, the same happened because the dollar is the quote currency here. We had Euro spike all the way down, and we're still back to that level, testing the same place where selling pressure came in. And the same with the JPP USD. But for JPP USD, we have surpassed that level, and we are back, going back to our highs that we had created previously. On the Audi USD, the same happened. That spike happened. Let me go to the 15 minutes, the 5 minutes chart. On the Audi USD, you can see that same spike happened because of dollar strengthening during that NFP. On gold, gold was one of the pairs that we were focusing at during yesterday's session. And let me just take a brief aspect in gold. Fundamentally speaking, gold prices tumbled significantly following the NFP release. The combination of a surging US dollar and a sharp rise in the US Treasury yields proved toxic for the non-yielding yellow metal. The strong jobs data diminished gold's appeal as a hedge against economic downturn. The strong data diminished gold's appeal as a hedge against economic downturn and a potential Fed easing cycle. We bounced all the way from 33.49, moving down all the way to 33.08, and buying pressure came in, and you're able to test this level. Today, the market is on a calm because of the US Independence Day, so expect little to no movement on any US stock or any dollar pair asset because of that Independence Day happening today. What you can do today is analyze what has happened this week, create your trading plan, look at your trading plan, create your trading journal, and prepare yourself for the upcoming week on Monday. And never forgetting that we have also another high impact news coming on Wednesday known as CPI. So, with that said, thank you for joining today's morning market call. There isn't much to say because of the Independence Day happening today, so there's not much move happening today. So make sure that take that break, relax after that form of volatility that happened. If you took a loss, brace yourself as you expect. As you expect the coming week. Remember, there's always opportunities in the market. Therefore, the only thing that you have to do as a trader is have the right trading mindset and always have the right risk management that will always keep you in the game each and every day. And for those who made money yesterday, congratulations. And remember, don't let it get into your head. Prepare yourself, have the right trading mindset as you prepare for this coming week. Let's say goodbye and have a lovely week.